Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Barajan, currency analyst, and here with me is our chief economist, Michalis Florenjadis. So, Michalis, it's been another rocky week for the US dollar, as well as for financial markets. We've seen quite a bit of a risk off. We've seen more departures coming out of the White House, as well as increasing trade frictions. This supported the Japanese yen. The dollar looks set to end the week 1% lower. So please, can you tell us a bit more detail what were the main drivers this week?
I think the key factor that moved markets and markets were watching was, as you mentioned, what was happening with the White House. We had the departure of Rex Tillerson, who was Trump's Secretary of State. This Tillerson was seen as a perhaps moderate, not so much as a foreign policy hawk, someone who was more trusted. So his departure, I think, shows that, combined with the previous week's departure of the president's economic advisor, shows that some figures that were seen as more moderate are leaving the Trump administration, whereas some who are advocating more aggressive policies, particularly in trade measures and trade practices, are gaining some more extra prominence. So this is causing worries, and it's interesting. There was also quite a lot of rumors concerning potential tariffs against Chinese imports into the U.S., also against Chinese goods. So this could definitely have a serious effect on world trade, especially if there's retaliation by China. Then we could have a so-called trade war in our hands. Now, it was very interesting to see that the yen was the main beneficiary of these developments. I say interesting because Japan is a major exporting power, so you would think that perhaps trouble in world trade would hurt its economy, most probably. But the yen's safe haven status seemed to trump those concerns, as well as the existence of a Japanese scandal, the emergence of the scandal involving the prime minister and the finance minister. We'll see how serious that becomes, of course. Sort of worked to strengthen the yen because it was seen as making Abenomics, let's say, less certain in the future. And one of the key principles of Abenomics is very loose monetary policy. So if we take away very loose monetary policy, that could lead to yen strengthening. So that was the theory of the yen not selling off again in the face of this political news.
Now, an underperformer this week has been the Canadian dollar. Even though we haven't had anything too significant happening on the NAFTA front, we did hear some very dovish remarks by the Bank of Canada governor. It's quite a bit of a turnaround for the loonie, which until recently had been rallying. So can you tell us what's the outlook now, where things stand for the loonie?
I think the loonie is sold off firstly because it's the northern neighbor of the US. So if the US is turning more protectionist, this is going to hurt the Canadian economy for sure. And the second reason is that we saw pressure across the developed country commodity currencies, such as the Aussie, the New Zealand dollar, and the Canadian dollar. All three of these countries are commodity exporters, and if world trade takes a hit, then commodity exporters are also going to suffer. And the loonie's loss is quite significant. Dollar loonie rising above 130, losses of over 2% on the week. So from this point, what can you tell us about next week, Rafi? What should we watch out for, and what is going to be important given this context that we just talked about?
Well, it's going to be quite a packed week in the coming 7 days. The highlight will probably be the FOMC meeting on Wednesday. We've got the latest quarterly projections coming up. So that will probably overshadow the expected rate hike we're likely to see. The dot plot chart could indicate Fed policymakers want 4 rate hikes this year rather than the 3 that's currently being projected. We're going to have more central bank meetings. We've got the Bank of England having its meeting on Thursday, and the Reserve Bank of New Zealand also gathering the same day for its rate decision. But apart from the Bank of England, there's going to be other factors putting sterling much in focus next week. We're going to see inflation numbers, job figures, as well as retail sales, all expected to be released next week. And of course, the EU summit, which is going to be very crucial because EU leaders will be deciding whether or not to approve a transition deal with the UK. And sticking to politics, we're also going to have a G20 meeting as well. And given the recent developments on the trade front, we could see some friction emerging between G20 nations. And we're going to have more important data as well in terms of inflation that's expected out of Japan and Canada and Australia. We're going to see the employment report. And also what's going to be interesting will be the March flash PMI readings out of the Eurozone. If we do see further weakness, slight weakness in PMI readings coming out of the Eurozone, that could further weigh on the euro, which this week we saw coming under pressure from dovish comments by Mario Draghi.
So to sum up, I would say that for sure the Fed meeting where we are expected to get a quarter point Fed hike is probably the highlight of next week. I would also watch if President Trump announces new tariffs against China, and this could spark retaliation and the more controversy and frictions over trade. I think it's also a very important week for the pound because we are going to get the UK and the EU agreeing or disagreeing on maybe a transition deal, which is important to give some kind of guidance how the negotiations are moving on, plus the other data. So we're looking forward to a very interesting week. So thank you very much, Rafi. Thank you everyone for watching and have a great day.